The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 11th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Workshop Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 108 points, 24,299 is the print. S&P is down 4, 2652. You've got the NASDAQ 100 up about a point and a half, so flat. Russell 2000 is the strong dog out here, up 5 points. That is about 0.4% to the upside. You've got gold up 13 bucks. That's off of its highs, trading down at 13.59. Silver up 18 pennies. Light sweet crude up $1.28. To the upside, leading the charge, it is Netflix up $8.84. Booking Holdings up nearly about $8. AeroVironment Inc. AVAV is the ticker symbol. That's 18% to the upside, or $8 and change. To the downside, it is Analog Corp. ALOG, a log out there, is truly a log today. Down 13%, nearly $13. Mercado Libre up $12 or 3.5%. Google is off 11. That's just a little over 1%. So we do have stocks to look at. Of course, I want to look at what you want to look at. And the first question, we've got a couple that have come in. The first question is, who was it? It was Drew. I believe it was. I apologize. It came in much earlier, and the question was, this was a new listener, and Drew had asked, should I just, now that we know that the U.S. is going to strike Syria, should we just go ahead and short the market? And I wrote back to him because it was pretty early. I didn't want him to necessarily jump on board that train, and the reason is, I mean, it's a logical conclusion, so I get that. But let's just go back to the market, take a look at what it did the last time that the U.S. launched and lobbed, I don't remember exactly how many Tomahawk missiles, 59 or something like that, 95, some large quantity of Tomahawk missiles that we went through. That was back on April, what was it, 7th, 6th? Right around April 6th, I believe it was. Might have been the evening of April 6th, or the day of April 6th, April 6th, April 7th. Here's the S&P 500 at that point in time. And you can see that the U.S. stock market, if we just take a look at the S&P 500, didn't budge. Now, an all-out war, that becomes a problem for the U.S. stock market. I've done studies that go back many, many, many years that take a look at wars and other skirmishes. I always like to use that word skirmish whenever you can kind of fit it right into a sentence out there. And that does have some fairly negative repercussions until all of a sudden the market senses that maybe there's going to be a turn in whatever that skirmish might be out here. So, no, just because the U.S. has signaled that that's what we're going to do, is that a reason for you to go ahead and short the market? The answer is no. Now, I didn't say don't short the market to Drew. What I said was don't short the market because you believe believe the market's going to respond negatively to a missile attack or whatever it is that we are going to do or potentially do out there, and just simply going back and taking a look at the last event out here. If you're going to go short the market, don't use that as a reason. Use it as the reason for the S&P 500 that we're still not above the closing price of December in 2017. That number is 2673.61. I didn't say short the market. I just said come up with a better reason to do that. And to me, that would be a better reason than the mere fact that we're going to go ahead and lob missiles out there. Larry had asked if we could go take a look at IBB. Larry, I apologize because I don't remember what you're doing inside IBB. That email came in fairly early. And let's do a couple of things out here for you. Let's take a look at the IBB. Let's go ahead and take a look at our horizontal trading range levels. And let's start with the left-hand panel. That is the daily time frame. And here, we're stuck in between the daily range of 101 and 106. What we did earlier today was we got up to the 106 level. So from a daily perspective, you're looking for price to get above that. If it can get above that, then 109.62, 112.49 becomes your next price target. It's really hit a fairly decent level of resistance at that 106 level. That's what the daily shows us. Well, the weekly shows us for the week, it's only Wednesday, that its resistance area is 105.93. So we are trading at 105.91. So here's what we know about the IBB. Whether you're in it or you're not in it, you're in it to win it, whatever trade it is that you might be taking, you're really up against a fairly decent area of resistance. If we look over at the monthly horizontal trading ranges, those are the ones that are red out here, 106.67 happens to be its ceiling at the moment, resistance level. You'd really like to see it close above that. The weekly, the daily, the monthly, each show that inside the IBB, you're up against resistance. That's what it's showing. Doesn't mean sell, doesn't mean short. Well, it means you're up against resistance. If we go take a look at the TAS market profiles on the daily level, on the weekly level, on the monthly level looks fairly bullish. Price is up above the top of its box out there. So we'll just kind of leave that off to the side, but say, hey, got to recognize where that horizontal trading range level is, and that is a level of resistance that must be overcome. The week's not over, but from a TAS market profile standpoint, if price is able to stay above 104.68, that would be intermediate term bullish because you'd be back inside its range, and I would say, okay, price is going to go target 111.99 to 113.82. This is a bearish structured weekly box out there. The snipers are hanging out at the 111.99 to 113.82 area. Inside of the daily profile, it says if price can close above 105.56 today, that's the bottom of its box. It did so yesterday. Then you could see a price move to the 110 to 111.78 area. It too has snipers hanging out in those two price points, and it too has a bearish structured box out there. That means overcoming that resistance area could be a tough thing to do. If we go take a look at one more chart for the IBB, we put up Stevie's other charts and sets of tools out here. This tells us that anything going on inside the IBB must be considered at this stage of the game a counter trend rally. You want to see price stay above 104.65, Larry, for that counter trend rally to continue. So that's the IBB, that's the S&P, and the U.S. lobbing some missiles at Syria. We come back from this next break. Looks like Matt wants us to go take a look at light sweet crude, black gold, Texas tea, and that's what we'll do.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're going to go over to Light Sweet Crude. We're going to take a look at what's going on in it, or at least what we see for Matt in St. Pete. So the first chart here that you and I are looking at happens to be his TAS market profiles for 4 different time frames. 60-minute is the left panel. 240 is next to it. Next to that is the daily, and on the very right-hand side is the weekly time frame. What you're going to see out here, Matt, is a series of green shoots, green bars, and that's a positive. So that is most certainly bullish on each of those time frames as far as its TAS market profiles are concerned. Now, these profiles are great for being able to identify support or resistance. This says to me, because you're managing some call options, that you really want to see price stay above, preferably 66.55, 66.44, and most certainly 65.37. Those would be the numbers to keep an eye on out here. What I was referring to was the top of the daily box first, then the top of the very short-term 60-minute profile, and then the last number was from the weekly time frame. But these, again, are helpful at identifying support and resistance levels, and certainly being able to identify when a breakout is occurring. Then it's up to you and I to go take a look at a set of other tools to say, is this a not-so-fast breakout out here? And if we take a look at the weekly time frame chart, the interesting pattern that shows up as we speak right now, if we take a look at doing the old wave count out here, and that's off of the lows from the week of June 23rd, 2017, you will see that we are either in that 7th wave, that's letter G, or we're in wave number 2. Don't know which is which, but it's not exactly what you wanted to see in order to hang on to these call options. The other thing is that a couple of weeks ago, 2 weeks ago, you had a nice Tommy DeMark sequential sell signal. Now, it has not been effectuated. I mean, we don't have the confirmation that says, okay, go ahead and take the short on that, but it is at least a topping pattern that is present. And then if we go over this weekly chart, if we go all the way over to the left-hand side of the chart, from a weekly perspective, we can see we're up against prior swing points from back in October of 2015. So you're up into a resistance level. The real resistance level was the high of the week of November 6th, which happened to be your old bear sash candle out there. So so you've got to be able to make the the risk reward analysis here, because it looks like you're in pretty decent shape. Let me take a look at an even longer term picture out here, because on the daily, with regard to this set of charts, I didn't see a whole heck of a lot. The weekly, absolutely. You have that potential seventh wave move out here. No, that's because I've got this. I have to go put the continuous contract up here to see what we can see, if anything. So let's do that for you, just so we can be thorough. And if you've got some other question, just go ahead and let me know. So what we do like about, you gotta love it. I'm doing a workshop tonight showing folks both the bullish and bearish pattern that exists, but certainly the bearish pattern that existed before every single bear market inside of the Dow, excuse me, for the last 130 years. So, if you're looking for a real education that you can put to use and make money, then you should simply sign up for tonight's workshop, become a subscriber for the next 30 days out there. The pattern that it formed back here, back at the lows, back in 2000 and when was this? Just 2016. Looks like February 2016. Beautiful pattern out here. If Lightsweet crude is going to continue to move higher, we can give you a price projection just off of that pattern, because what we have out here is your old A to B equals CD, and the 1-to-1 level on that, Matt, is the 71.24 area. So yeah, I know you don't want to cut the trade short. You got to respect these longer-term time frames out here. So weekly and so monthly is, do I see an issue with regard to the monthly? That would be the question that you should ask, because it's a question I'm asking myself. And the answer would be, sure, month is not over. In fact, it's only the 11th, so it's kind of the middle. But we can see that this area right here, here's your little dark cloud cover. So it's going to be the high of either the session that it was clouding, or its own candle, and happens to be the high of January. That high of January is 66.66. Sounds a little devilish. You're at 66.87. So you've got some resistance out here. Do I see any sell signals? No. What we see are patterns that could offer a sell signal, though. So I hope that really helps you out, Matt, on your Lightsweet crude. Looks like you're in a great trade at this stage here. I don't know how many call options you've got, but you've got some real options out there. And I didn't mean that as a pun. I meant you've got some options, to take some bread off the table, things of that sort out there. So that's what I see on Lightsweet crude monthly. We didn't look at the daily. The only thing I could do on the daily for you, because I can't trust the volume bars that I'm getting. I'd like to, but I can't. It looks like the high from the day of March 26 is being taken out with volume. Let's just do this for you. What is it? The what is the ETF for Lightsweet crude, guys? What is it? What I'm having a brain contusion here. What is it? The oh man. The USO. Thank you. I knew it was something like that. So let's go take a look at the USO. Thanks, Martha. Always good to have a wing man or woman, in this case here, back up. Now, we got to turn the volume on here. Now, look, Matt, even if this does have the volume, which I suspect it will, and that's referring to being able to take out the swing point or the B point, March 23rd, that has 18 million shares, you're at 16.6. So you are getting a signal of a confirmed A to B equals CD to the upside. So that's about the last piece of information that I can provide you. I do hope that helps you out with regard to your trade there. So we'll just check in real quickly. I think I've gotten everybody's questions in the Tigers Den. Looks like I've gotten all emails. Of course, if you've got a question as well, you can give us a call at 877-927-6664. You can also send me an email, steve@tfnn.com. So now let's go check in on the markets. Try to figure out what are they doing out here. You know, I think it's best to start with market breadth. So as we start with market breadth out here, here's the market breadth for the daily. Daily still is in what we'll call a bearish configuration, meaning that there's 137 constituents trading below the bottom of their profile. That would be bearish. And there's 101 trading above the top of their profile. The number has not narrowed since you and I last spoke about it. If we look at a 4-hour chart, this is still in bullish configuration. It was yesterday. So there you're seeing the market breadth or the possible change in trend that's underway. If we look at the 60-minute time frame, it too. This is the reason why we are seeing when futures were trading lower this morning, we still had a strong enough set of market breadth, 240-minute chart, the 60-minute chart, to go ahead and fight it off. That should be an important message for us. Now, look, if the daily ever gets to the bullish configuration, then you've got an all-out, we'll call it market breadth, buy signal out here. And they're certainly worth noting, albeit we've been in a sideways-ish consolidation kind of market. But eventually, these take hold to either the upside or the downside, and they can take hold for a very long time. Right now, you've got the ultimate fight between the bulls and the bears, and we'll have that fight until the VIX index closes below its 50-day. I hear the music. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tigers Den. The Tigers Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tigers Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tigers Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Excuse me there. The old frog in the throat. So the question that came in, we were just really touching on it as we went out to that last break, but the question that has come in from the Tiger's Den is, do we see a move higher or lower in the spot volatility index? And what I'll do here is I'll enlarge in this one screen, and this one screen here is taking a look at the spot volatility index, currently priced at 2006. By the way, the 50-day exponential moving average on this chart is at 1895. We've got the spot volatility index that's down 2% today. No big shakes. That's 41 cents to the downside. As we take a look at the futures contract, so we can start with April and run all the way into December, we have what those futures contracts are priced at. And what we can see is that each of the futures contracts going out in the future are trading below the spot volatility index. That is one of those unusual situations. If there really was some volatility concerns in the longer term, you wouldn't see that. You would see those prices higher than the spot volatility index. And we can most certainly say that about the 3-month and 6-month counterpart out here. When you see those signals, what it is communicating to you, just the message of the volatility index, is that a bottom is being formed in the market. Now, we've seen this signal around for the last, I'll just say, couple of weeks on and off out there. So that bottoming signal has been around for a while. But if you're going to ask me, what I can share with you is theoretically the way that this should work is this is telling us that the spot volatility index will move lower. The key is, will it close below 1895? Because it really just needs to get below, I'd say, 1910. You know, and start to get back in line out here. And 1910 is a much different meaning than, as we speak right now, something less than 1895. I'm not talking a tick or two. I'm not talking a penny or two. A close below 1895, and that's a clear signal that the S&P 500 and the markets will continue to move higher. As long as the spot volatility index stays within its range of the 50-day and the top of its Bollinger Band out here, which is 2519, we're going to see sideways chop out here. And so what does that mean? That means for those of you that are short-term traders, you are in a trader's paradise because you can be trading this thing to both the upside and to the downside out here. At least that's what it would mean to me. So that's what I see when I take a look at the spot volatility index. And if we get to a stage, I'll give you the bullish case. Because right now, the only thing I'll give you the bullish case. The bullish case is this. You close below 1895 in the spot volatility index. The daily S&P 500 changes over to a positive market breadth. And then the real bullish case would be for the S&P 500 to be able to take out the 2700-ish area. I don't know if it's 2720 or 15 or whatever it might be because of that descending price channel. That could be the extent of a counter trend move inside of the S&P 500 or the ES Mini as we speak right now. The Dow is probably the element to be watching. You know, I've shifted a bit from taking a look at the NDX 100 only because it has generated a bottoming signal out there. So it has already done its work. It did it yesterday, and it confirmed it thus far today at 1:34 in the afternoon. That's the message. At least the message there is more of a counter-trend rally. Whether it's a bottom or it's a counter-trend rally, that we don't know. You have to kind of take things one moment, one step at a time. The Dow has actually put in the best bottoming pattern out here. And what we're waiting on, the Dow Equity Futures contract, is to say, hey, can you close above that descending price channel? Because it hit it yesterday. You and I were live when it was trading up into that level, and it's hit it, and it has pulled back. But it's inside this other sideways-ish type range, which is in between Stevie's red line, currently at 24,047, and that descending price channel area. Put in a great bottoming signal. Price move lower, do a less relative energy. Then you got the old hammer time out there. 2, 4, 6 trading sessions ago, and price closed over Stevie's red line. It is telling you that the Dow is doing everything it can to put in, or has put in, a bottom. But it needs to overcome, I can't tell you why it works, I just know that it does work, that descending price channel. You get above that, and really you get above the high. At this stage here, what I would say, it would be the high of the trading session of April the 5th. That high, by the way, is 24,596. That would be a strong bullish case that the Dow wants to continue moving higher. What's the bearish case? The bearish case is that it can't take out this descending channel line, and price then moves back below 24,048, and then it says, you know what, I may want to go test that hammer low and just see how serious that the buyers were about trying to put in a bottom inside of the Dow. So that's what I see when I take a look at the markets. But I want to know what you see out there. The other levels I'd be watching, the markets are certainly, I don't know, you might say, well, how can you say certainly? I just can. Are certainly at least short-term bullish right now. They will remain that way as long as the ES Mini stays above 2604.50, as long as the NQ stays above 64.51.50, as long as the Dow Equity Futures contract stays above 23,914, and inside the old Russell 2000, it would be 15,60. In fact, let's go check in on the Russell 2000. Someone out there, I believe it was me, made the case yesterday that actually the Russell was a pretty bullish setup out there. And I know I gave Ron some information a couple of days ago that suggested he take his profits on his options as price was moving into that April 5th area with lighter volume. Turned out by the end of the day it was heavier volume, saying that price was going to push up there. It did so yesterday. Yesterday actually tested the high. Here, let's put a yellow line, because I like yellow. You like yellow? Yeah, who doesn't like yellow out there? Whoops, I got to grab the right tool. So let's put a yellow horizontal line. Let's put it across the old swing point. So it's 153.61. It was 17 million shares. Yesterday was a test and rejection with 24 million. What did that tell you? That told you you're going to go test that swing point again. Well, today you're trading above it. You've got 8.8 million shares at 1:37 in the afternoon. Do I still have this chart up here? I believe I do. So let's put 8.8. 8.8. We've been trading for, what, 4 hours? So it says you're going to do about 14 million shares. So we're doing a bit lighter volume today, but, you know, if you close over 153.61, you can still move higher. And in this case here, by moving higher, you can really make the case you're going back to the highs. You absolutely can inside of the Russell 2000. What else should one be watching for then inside the Russell 2000? Let's go take a look at the daily index. Let me go ahead and give you the Russell 2000 number to track out here, and I'm going to go to it's 1531.50 out here. 50 cent. That's what it is. 1531.50. Yeah, it's looking pretty good. Quite frankly, Russell 2000 should continue moving higher 6, 7, 8, at least through Monday. How do you like that for a call? Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 127. The S&P is off 6 points right now, and I was looking for it on my phone. I could not locate it, but I did have a listener wrote in yesterday, and the listener was trying to make some decisions about their 401k, where they had, about 15 different options that they could select. None of those options inside their portfolio, inside their retirement account, was to be able to go short. But this viewer position was that we were now in a bear market. We're going to continue to be in a bear market for some time to come. And I was asking the question, should he go more heavily weighted into bonds, or should it be some other option out there? Today or right now is a really good, and the way that I wrote back, right now, today is actually a good reason to just kind of mention it or cover it. You see, you've got the 30-year Treasury, the 10-year note. Those are trading higher as we speak right now. You've got gold to the upside by $14, and we've been on and off, but we've also had the S&P 500 and the NASDAQ. We're trading higher. I don't know how we're going to end the day here, but you see, all three can trade in the same direction. And that was really the point that I was making yesterday, that if you believe that we're in this terrible bear market, and this person gave a number of reasons, they were fundamental type reasons, geopolitical type things. So the point that I wanted to make was there are plenty of times where you see the market and bonds specifically trade in the same direction and for long periods of time. Long periods of time. And what I suggested was go back and take a look at the beginning of 1981. That was a bear market, or 87 or 90 out there, and go take a look at what the market was doing and go take a look at what bonds were doing, so they can all trade in the same direction. And that could be to the downside too out there. So for those of you that have the same opinion that this gentleman had, should you go into a heavier weighted portfolio into bonds out there? I say that's not the reason to do it. If you want to go more heavily weighted into bonds, it's because you believe that they're moving higher and yields are moving lower. Don't do it with regard to because you think we're in a bear market out there. So just want to pass that along. Thought it's kind of apropos because today we've got, in essence, we've had at times where all three are trading to the upside. So we've got a question that says, please see the queue above. And Top Dog wants to look at the GDX, so we'll do that too. Look below. A hand-drawn note of yes, Minister. Can you envision that scenario? All right, so let me see if I can open this up on my screen out here. Oh, no, it's not opening. I don't know why. Sometimes it does that, so I'll try to do it during the break, but it's not opening. I apologize. The file that you sent isn't opening, so oh, maybe I've got it. Okay, I see that. This is the handwritten note out here. Right, is this the handwritten note that we're talking about, Mr. Z? I think it is. So you're looking at an April 2nd low, an April 5th high, a pullback, and then continue moving higher to create an A to B equals CD. Can I envision that? I absolutely can because you drew it. So the envisioning is pretty easy. If that's going to happen, what I would prefer to say, and let me just come over here for the S&P 500. If that's going to happen, you were using April 5th. So what, in essence, what you were doing was drawing some type of Gartley and some type of A to B equals CD. So here's when I say some type. This is the one I believe that was being drawn out here. It would look something like this, right? And then you're just simply targeting some type of A to B equals CD extension. Could be 2704, could be 2736, could be 2777, 2822. Am I along the lines of what you're looking at out there? I think that we are. And all of that would really set up a Gartley sell pattern out there. And so, yeah, I can envision that. When the S&P 500 gets above, should it get above 2673.61, that is the close of December, the calendar year December. That's what really offers the most potential hope or promise that you move all the way back to at least the prior swing point. It is very possible, and the S&P 500 is really a good candidate to show the actual consolidation that I believe that we are in at the moment. And excuse me. And it is such a wide range out here. I mean, just take a look at this consolidation. I mean, this is a big, giganto pattern. It goes along with the lines with the fact that the S&P is trading 49 points on every day on average, at least for the last 10 days out here. Today, a narrow range, at least as of right now, but still wide range out here. So there's your consolidation. This is most likely the pattern that we are in as we speak. So, yeah, I can envision that. All right. Let me I hope I answered that question as best I can. Top Dog wanted to take a look at the GDX, ready to run or just more consolidation? So to answer that question, Top Dog, what we need to do is really go take a look at gold. And if we take a look at Goldilocks out here, here's what gold is up against. Well, I don't have it right here. Here's what gold is up against in about a moment. We'll actually go ahead and hit the actual symbol. If you take a look at the two left-hand panels on our screen, what you are looking at are the weekly and daily profiles. What you saw take place earlier today was a spike of those resistance levels. 1362.70, 1362.60. We're trading at 1358.90. In other words, those levels have acted as resistance. Are they going to hold? is gold going to go ahead and pull back from here? It's really possible, Top Dog. So at this stage, you're asking, is it ready to run? The answer is no, it's not ready to run right now, because all it's done is made 100% move by going back, testing the prayer swing point, and now it's back underneath the daily and the weekly profiles. In order for us to conclude that it's ready to run, you've got to see price close above resistance. A lot of time left in the trading session, plus tomorrow. But at 1:49 in the afternoon, the answer is no, it's not ready to run. That's why I'm giving you the answer as of right this very minute. Is that a beautiful thing or what? If we take a look at, as Mike K wants to, take a look at gold priced in euros, it has not made it up to its level that it needs to in order to get that GDX ready to run move that Top Dog is looking for. As we speak right now, you're at 1098. If you were going to go buy a 1 ounce, pure 1 ounce gold, without the commission on it, okay, without the premium, but if you're going to buy 1 ounce of gold in Europe right now, you only need 1,098.40 euros. What you want to see, what I want to see, is for it to cost us more in euros. And the more is somewhere above 1,100, we'll call it 1,108 euros. Above 1,108, then yes, Top Dog, my answer would be, yeah, the GDX is getting ready to run, regardless of where gold priced in U.S. dollars is trading. How about them apples? But right now, you just kind of got the consolidation thing going on. But let's go take a look at the GDX when we come back from this breakout here. Let's go see what kind of volume we've got there. Maybe it's got a mind of its own.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So I got the coolest email this morning. This came in from Tim O. It was at just past 9 o'clock this morning. I'll read it to you, read most of it. It says, Steve, just wanted to thank you for the great education. It says, I almost gave up on trading, but your show encouraged me to hang in there. I will be at your class tonight if I can change my schedule. If not, I will just go ahead and get it on the archive. Now, what's so cool about that message is it always is a nice dose of reality. It kind of brings me back, or should bring us back, to the real reason that we're here. And that includes you, too. Right? You're part of this community. This is all about being able to influence others to deal with the thing that's perhaps most difficult, which is trading and investing, which is not burying your head in the sand out here. For me specifically, it's about being able to change one person at a time. If I can change one person, you can change one person, then we've got the power. We've got the Facebook. We got it better because it's FaceTime power out there. And so it was really great that Tim went ahead and spent the time to write to me, a great message out there. So I'm just looking for one more person. Who is it out there that I can help, just like I was able to help Tim here, to be able to better themselves with regard to understanding what the markets are doing, put the probability in your favor out there. Maybe just imagine the ability. Maybe don't do it for yourself. Oftentimes, we work harder for others than we do for ourselves. I don't know if that's true for you. It is true for me. If I'm on your team, I guarantee you want me on your team. You want me in that bunker next to you because I will do everything I can to save your hide. It's just simply the way that I'm wired out there. So I'm looking for one more person for tonight. One more person. I just want to change one person's life. If you've never taken my subscription service, there is absolutely every reason for you to attend tonight's workshop. Come over to the homepage, TFNN.com, sign up. You don't have to be there, just like Tim. But sign up, get a great education. Maybe you'll learn something that you can pass down to your kids, your grandkids. I know you can, because these markets have worked the same way for the last 130 years. Folks, stay tuned. Your favorite polar bear, David White's up next. I'll be back with you at 5 o'clock. You're signed up for tonight's workshop. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.